Hey there, welcome back to our channel. Today, we're diving into the world of finance to discuss a topic that might not be as familiar to everyone: demand loans. These are loans that can be called in for repayment at any given time by the lender. They're short-term, secured against collateral, and can be a lifeline for individuals and businesses needing immediate financial assistance. So what exactly is a demand loan and how does it work? Stick around as we break it down for you. First off, let's start with the basics. A demand loan, often known as a DL, is a loan that can be called in by a lender at any time, requiring immediate repayment. This type of loan is typically secured, meaning the borrower provides collateral as a form of insurance against default. Demand loans are versatile and can be used in a variety of contexts, from meeting personal financial emergencies to addressing business cash flow needs. These loans are typically short-term, with durations ranging from as little as 7 days to a maximum of 1 year. Now let's talk about the different types of demand loans out there. The world of finance is filled with a multitude of options designed to cater to a diverse range of needs. Among these, demand loans stand out for their unique features and flexibility. They range from personal lines of credit, often utilized for home renovations or unexpected expenses, to business lines of credit, typically used to fund short-term operational needs like payroll or inventory purchases. Other types include credit cards, a common form of unsecured demand loan, overdrafts serving as a safety net for checking accounts, and cash credits providing businesses with an instant cash flow boost. Each type comes with its own set of features. For instance, demand loans provide flexibility in repayment, allowing borrowers to repay at their own pace, typically have shorter sanction times, and may require minimal documentation. This makes them an accessible option even for those with less than perfect credit scores. From personal lines of credit to business lines of credit, credit cards, overdrafts, and cash credits, there's a variety of options to suit different needs. Now, what are the benefits of opting for a demand loan? Demand loans are a versatile financial tool with a few key advantages. Firstly, they're readily accessible, even for those with less than perfect credit histories. Secondly, they offer quick disbursal, meaning the funds can be in your hands swiftly when you need them the most. Plus, they can be repaid in full at any time without incurring penalties. But wait, you might be thinking, how do demand loans actually work? Well, once approved, the funds are typically transferred to your account, and repayment begins as per the terms of your loan agreement. And what are they most suitable for? Great question. Demand loans are a fantastic option for short-term financial needs like unexpected expenses or business cash flow gaps. And there you have it, folks. A comprehensive look at demand loans and how they can be a valuable financial tool for individuals and businesses alike.